Part 1. Your comfort zone is killing the trader inside you. Your comfort zone isn't protecting you. It's killing you one trade at a time, slowly, gently, quietly. No drama, no instant pain. Just this. Every day you feel fine, but your account doesn't grow. Every day you still open the chart, still watch analysis, still wait for a cleaner setup, but at the end of the month, when you look back, you're in the exact same place. We were taught a very dangerous lie in trading, that avoiding discomfort will keep you safer, that if you don't enter, you can't lose, that waiting for more confirmation is more certain, that you should only trade big when you feel more confident. But what's the truth? You can sit for hours deciding which analysis video to binge. You can compare indicators, backtest a little more, tweak the strategy one more time. Yet you can't spend just 30 minutes facing your biggest fear, entering according to plan with the correct size, and accepting the possibility of losing. That isn't caution, that's avoidance. And here's what nobody tells you directly about a comfort zone in trading. It has an expiration date. Markets change, volatility changes, win-loss cycles change, and you change too whether you notice it or not. And standing still in trading is never truly standing still. Standing still means falling behind. A comfort zone creates a dangerously convincing illusion, the illusion that I'm in control. You don't take trades, you feel safe. You don't size up, you feel smart. You don't dare do anything different. You feel like you're not reckless. But in reality, you're becoming more fragile every day. Because every time you avoid a hard decision, your capacity to tolerate pressure shrinks a little. Every time you skip a setup just because it doesn't feel comfortable, your brain learns a silent lesson. Running away is safe. And when a real drawdown hits, when the market doesn't give you time to prepare, when a losing streak comes at the exact moment you're least ready, you'll realize you're far weaker than you thought. Not because you lack knowledge, but because you've lived in the easy zone for too long. In trading, every valuable skill lives outside the comfort zone. Discipline is uncomfortable. Holding a position without taking profit is uncomfortable. Cutting a loss exactly as planned is uncomfortable. Not revenge trading is uncomfortable. Not sizing up right after a few wins is uncomfortable. There isn't a single real trading skill that doesn't require going through discomfort first. The traders who survive long-term aren't the ones who avoid emotion. They're the ones who learn to stay inside the emotion and still execute correctly. They understand one simple but brutal truth. Discomfort is not a trader's enemy. It's the training environment. Your brain isn't programmed to help you make money. It's programmed to keep you safe. In the primitive world, that was an advantage. In trading, it's a trap. Your brain can't tell the difference between a tiger charging at you and a trade that might lose 1 R. Your heart speeds up. Your hands tremble a little. Your stomach tightens. A voice whispers, maybe. Wait a bit more. That isn't intuition. That's your ancient survival system driving you. And if you don't understand this, you'll repeat the same loop for your entire life. Avoid, feel safe, get weaker, feel more fear, avoid even more. But here's the good news. Once you understand how this system works, you can start working with it instead of letting it sabotage you. You don't have to stop being afraid to become a great trader. You just need to understand that fear isn't a signal to stop. It's a signal that you're training, and that is where the real journey begins. Part 2. Ancient brain programming and the trader's psychological trap. Your brain has one single job: keep you alive, not to help you make money, not to help you stay disciplined, not to help you become a consistent trader, just survival. The problem is this brain was built for a world that no longer exists. A world where danger was physical, immediate, and deadly. A world where hesitating half a second in front of a predator meant no second chance. Trading isn't like that, but your brain doesn't know. To your ancient brain, a losing trade isn't losing money. It's losing safety, losing control, losing status, losing the feeling of, I'm good at this. So the same system that helped your ancestors survive the wilderness now overreacts every time you press buy or sell. Your heart races not because the market is dangerous, but because your brain thinks your identity is under threat. The amygdala, the fear processing center, doesn't analyze probability. It doesn't understand 1% risk. It doesn't understand positive expectancy. It understands only one thing. This feels unsafe, so it pulls the alarm, the urge to close early, the urge to move your stop, the urge to add more size so it doesn't feel like a waste, the urge to stay out because it's not certain yet. That isn't personal weakness, that's programming. Your brain also has a very dangerous bias in trading, negativity bias. It detects threats far faster than it detects opportunity. One losing trade burns deeper than 5 winning trades. One stop out can haunt you more than a whole month of trading correctly. A small drawdown is enough to make you doubt your entire system. So you do what the brain loves most. You plan instead of act. You backtest more. You tweak indicators. You search for more confirmation. You watch more videos. Because planning gives your brain a feeling of safety. Action does not. That's why so many traders know a lot but do very little. Not because they're lazy, but because their brain has learned. Action, in danger, preparation, safety. The stress response that once saved your ancestors from death is now blocking your growth. When you approach a correct but difficult decision, your body reacts before your thoughts do. Heart rate shifts. Breathing becomes shallow. The body tightens. A voice appears sounding completely rational. Maybe not. Another opportunity will come. And here's the key point very few traders understand. The same physiological response can be a danger signal or a growth signal. Your brain can't tell fear from excitement. It only supplies energy. Your interpretation decides everything. An inexperienced trader feels the heartbeat rise. Something's wrong. A mature trader feels the heartbeat rise. I'm at the edge of development. The difference isn't the feeling, it's awareness. Awareness is the ability to step back half a step and say, this feeling is familiar. It won't kill me. It's training me. When you realize discomfort isn't a stop sign but a training signal, you take the wheel back from the ancient brain. You don't have to turn off emotion. You just have to stop letting it drive. In trading, you will never eliminate fear, and you don't need to. You only need to learn to recognize it and execute correctly despite it. That's when something crucial begins to form. The capacity to tunnel pressure with control. Part 3. The advantage of anti-fragility in trading. Most traders try to avoid stress. They want a low-pressure strategy. They want an easy-to-trade market. They want smooth sessions. But that's a fatal misunderstanding. The problem isn't stress. The problem is the kind of stress you're exposed to. Your body is designed to become stronger through pressure, not weaker because of it. When you lift weights, you don't get stronger despite the stress, but because of the stress. Muscle fibers tear. The body doesn't just repair them. It rebuilds them stronger, thicker, more capable of load. Trading works the same way. A planned loss doesn't make you weaker. It thickens your nerve. A small, controlled losing streak doesn't destroy you. It trains your nervous system to tolerate volatility. The issue is most traders aren't exposed to controlled stress. They're exposed to chaotic stress. Oversized positions, no clear plan, no risk limits, no structure. That's not training, that's trauma. Anti-fragility doesn't mean enduring everything. It means getting stronger from the right kind of pressure. Some traders, the more they face drawdown, the more alert they become. The clearer they get, the colder they get. Not because they have no emotion, but because they've been trained under pressure long enough. They don't fear losing. They only care. Did I follow the process? They don't view stress as the enemy. They treat it like the training ground, like a vaccine. A small dose of virus teaches the immune system how to respond. Not by avoidance, but by controlled exposure. Trading is the same. When you allow yourself to lose small, consistently, and according to plan, you're inoculating your nervous system with the right dose of stress. It learns, loss doesn't kill me. This feeling passes. I'm still okay. Slowly, the things that once made you panic become normal. Not because the market got kinder, but because you got stronger. And here's the biggest trading paradox. The traders who avoid stress are the ones who shatter when real stress arrives. Meanwhile, the traders who accept small stress daily become extremely stable. We pay money to go to the gym to willingly stress our muscles, yet we avoid every beneficial psychological stress in trading. We want the profits of the seasoned, but we live with a nervous system that has never been trained. You can't be calm in a storm if you've never stood in the wind. Anti-fragility in trading is built from 3 very concrete things. First, small and consistent risk. Second, repeated exposure to discomfort. Third, reflection after each pressure event. Not suffering in silence, but suffering with learning. Every loss is data. Every emotion rising is a signal. Every impulsive reaction is a training point. You don't need to avoid drawdown. You need to learn how to move through it without breaking. And to do that, you don't need huge shocks. You need small, steady, intentional doses of discomfort. Part 4. Gradual discomfort. How traders train the nervous system. You don't need to become bulletproof overnight to be a stable trader. You don't need to dive straight into big trades, heavy decisions, or the most stressful sessions. In fact, if you do, your brain will resist violently. The ancient brain doesn't learn through commands. It learns through repeated experience. That's why gradual discomfort works. The principle is simple. Every day, you intentionally do something slightly more uncomfortable than normal, but not so big that your nervous system labels it as a life or death threat. In trading, this is critical. You don't train discipline by waiting for a big trade and then trying to stay calm. You train discipline through small, correct decisions, repeated. Very concrete examples. Keep your stop loss unchanged even when price comes close. Don't move your stop just to hurt less. Don't enter outside the plan even if the setup looks beautiful. Wait for conditions to align even when FOMO is pulling hard. These sound small, but to your nervous system, they're weights. Each time you tolerate a bit of discomfort without collapsing, your brain logs a new fact. This discomfort isn't dangerous. That's how you rewire reflexes. Most traders fail not because they face difficulties that are too big, but because they never trained the ability to face small difficulties. They wait until the account is bigger. Wait until they feel more confident. Wait until they're ready. But the nervous system is never naturally ready. It's only ready after enough exposure. This method works because failure becomes harmless. If today you keep the stop loss once according to plan, even though it feels awful, and the account doesn't collapse, you've won. Not money. A battle against the old reflex. Tomorrow, you do it again. And the day after. Like compounding. No explosion moment. Just a quiet shift in how you respond. Before, heart races, you act impulsively. Now, heart races, you still do the right thing. That difference is real discipline. The irony is we can endure hours of mindless chart scrolling, watching price jump up and down with no value. Yet 5 minutes of sitting still and doing nothing feels unbearable. Not because you're weak, because you've never trained. In this method, you don't force yourself to be great immediately. You ask only one thing. Don't run. Don't run from the discomfort of entering. Don't run from the discomfort of small losses. Don't run from the boredom of no setups. Stay long enough for the brain to learn. I'm still okay. After a few weeks, the things that used to tighten you up become familiar, not because the market got kinder, but because your comfort zone expanded. You don't become a different trader. You become a version of yourself who is no longer driven by survival reflex. And then something important happens. You begin to realize resistance doesn't disappear, but it changes roles from obstacle to indicator, and that's where we need to go next. Part 5. Reframing resistance, the compass of maturity in trading. Resistance isn't your enemy, it's a signal. The problem is most traders interpret that signal incorrectly. They feel tension, they retreat, they feel discomfort, they avoid, they hesitate, they call it intuition. But in most cases, it's not intuition. It's survival reflex. Resistance appears exactly at the growth boundary. You don't feel resistance when doing familiar things. You don't feel resistance repeating old habits. You feel resistance when you approach territory you've never held firmly before. In trading, the strongest resistance often appears right before the most correct actions. Holding the trade according to plan when you haven't taken profit yet. Cutting the loss quickly while you still feel attached. Not entering when FOMO is pulling hard. Not sizing up after a winning streak. These are moments where your entire nervous system protests. And if you always treat resistance as a stop sign, you'll stop your whole life right at the door. The key isn't removing resistance. It's reading its message correctly. There are 2 types of discomfort in trading. One signals growth. One signals self-sabotage. Mature traders learn to tell them apart. Profitable discomfort has clear traits. It appears while you're following the plan. It comes from breaking old habits. It doesn't destroy structure, it challenges emotion. You feel tense, but your mind is still clear. The process is still correct. Risk is still controlled. Self-sabotaging discomfort has a different smell. It comes from breaking discipline, from trading too big, from entering with no edge, from trying to make it back. That feeling isn't just tension, it's chaos. It drags in fog, impulsivity, and loss of control. The difference isn't intensity, it's context. An inexperienced trader asks, "How do I get rid of this feeling?" A mature trader asks, "Where is this feeling coming from?" When you voluntarily step into difficulty because it serves the process, you tell your nervous system, "This is development, not danger." Over time, the brain learns. Discomfort doesn't equal disaster. And then resistance shifts from chains to data. Each time you feel, "I don't want to do this," pause for one beat. Not to avoid, but to observe. If what you're about to do is, according to plan, within correct risk in the right context, then very likely "I don't want to" actually means, "This is making me grow." The bigger the resistance, the higher the potential expansion. Not always, but often enough that you can't keep ignoring it. Trading doesn't reward the people who avoid emotion. It rewards those who can stay with emotion without losing structure. And to keep growing, you can't stay at the same challenge level forever. Part 6. Progressive overload, why you're stuck in trading. No body gets stronger by lifting the same weight forever, and no trader matures by staying under the same pressure forever. The issue for many traders isn't that they do things wrong, it's that they do things right in a fixed way. Same position size, same entry behavior, same emotional tolerance, same discomfort threshold. They call it safe, but it's actually stagnation. Progressive overload says something brutally simple. Any system that isn't asked to do more will never get stronger. Your brain is the same. If you can only tolerate discomfort at a 3 out of 10 and year after year, you never exceed that, then when the market forces you to face a 6 or 7, you'll collapse. Not because you're bad, because you were never trained. Trading doesn't kill you with one giant shock. It erodes you with familiarity. You get used to trading small, used to avoiding hard decisions, used to stopping the moment emotion rises. And then you wonder why you're not moving forward. Progressive overload in trading doesn't mean recklessness. It doesn't mean suddenly doubling size, not trading more, not forcing yourself beyond capacity. It means gradually increasing what your nervous system must handle within control. Today you hold discipline with small risk. Tomorrow you hold discipline with slightly larger risk. Today you take one loss without breaking the plan. A few weeks later, you take a losing streak and stay calm. No leaps, just expanding your tolerance range. The interesting part is the brain adapts to any level that you face consistently. If you live at low pressure, your brain optimizes for avoidance. If you operate at moderate pressure, your brain optimizes for clarity. If you stand at the edge of discomfort without breaking, your brain starts calling that normal. That's why seasoned traders look cold, not because they have no emotion, but because their nervous system is used to pressure that others call unbearable. Comfort zones don't expand on their own. They expand only when you force them to. Once a challenge becomes familiar, it stops training you. Then you either raise the demand or accept staying stuck. This principle applies to every part of trading: discipline, patience, drawdown tolerance, resisting FOMO, resisting over-trading. You can't build these from theory, only from gradual experience. The key is finding the correct boundary. Too easy, no growth. Too hard, nervous system breaks. The right boundary is where you're tense but still in control, uncomfortable but not panicked, wanting to retreat but still able to stay. Right there, transformation happens. If you track your progress long enough, you'll see it clearly. The things that once made you sweat are now just noise. Not because the market changed, because you changed. But to go even further, you can't rely only on tolerance. You need something that helps you recover after each pressure event. Because no trader breaks during the stress, they break afterward. And that's where the next part begins. Part 7. The Emotional Recovery. Toolkit. How traders survive after pressure. No trader breaks in the moment they enter a trade. They break afterward, after a loss, after a sequence that doesn't go as expected, after trying to act fine while internally overloaded. The problem isn't that you have emotions. The problem is you don't process them. In trading, emotions aren't enemies to kill. They're data to digest. If you don't digest them, they accumulate. And when they accumulate enough, they explode as revenge trades, overtrading, or quitting. Your brain doesn't need silence, it needs correct release. When facing a loss, your body reacts before thought does. Heart racing, chest heavy, throat dry, shoulders tightening. This isn't weakness, it's your nervous system working. Failing traders try to suppress emotion. Mature traders learn to move through it. To do that, you need a practical toolkit. Tool 1, pause. Not stop trading for a week, just pause one beat. No extra clicks, no more analysis, no trying to get it back, just pause. Because impulsive action always appears before you've processed emotion. Tool 2, deliberate breathing, not to relax, to send safety signals to the nervous system. Inhale deep through the nose, exhale slow through the mouth. Repeat a few cycles. You're not doing it to become fearless. You're doing it to tell the brain, we are not dead. When the nervous system cools, reason has a chance to return. Tool 3, label the emotion. Sounds simple, but it's powerful. This is anxiety. This is disappointment. This is anger. When you name it correctly, you separate yourself from it. You are no longer the anger. You are the one observing anger. That alone reduces intensity. Anxiety and excitement feel similar physiologically. The difference is the story you tell. If you say, the market is against me, emotion escalates. If you say, this is a planned loss, emotion begins to settle. Tool 4, stay with the feeling. Don't rush to push it away. Don't rush to distract. Stay long enough to notice. It rises, then it falls. No emotion lasts forever. Only avoidance makes it drag on. Traders with strong recovery aren't people who never fear. They're people who don't run. They let emotion pass without turning it into sabotage. Final tool, conscious action. Once emotion drops, return to process. Not to get it back, not to prove yourself. Ask one question only. Am I still following the plan? If yes, continue. If no, stop. That is peak discipline, not discipline during excitement, discipline during exhaustion. Traders don't break because pressure is too big. They break because they don't know how to recover. Like training, muscle doesn't grow while lifting. It grows while resting. The nervous system is the same. If you never learn recovery, pressure becomes injury. But when you recover correctly, every endurance event becomes an upgrade. And when recovery becomes consistent, something interesting happens. You become more courageous without forcing it. Not heroic courage, everyday courage. And that's exactly the theme of the next part. Part 8, the compounding effect of courage in trading. Courage in trading isn't a reckless moment, not an all-in, not a huge position to prove yourself. Real courage is quiet, and because it's quiet, most traders don't recognize it. Courage is sticking to the plan when you want to break it. Courage is cutting the loss where your ego screams. Courage is not entering when the market looks too good. Courage is staying out and accepting the feeling of being left behind. These actions don't give instant dopamine. They don't make you feel great, but they accumulate. That's where compounding begins. Every time you choose the harder option instead of the comfortable one, you send your brain a powerful message. I can handle this. The brain remembers it, not through words, through experience. The first time discipline is painful. The second time, it's slightly easier. The 10th time, it becomes normal. Not because emotion disappears, but because you're used to living with it. Here's what nobody says bluntly in trading. Confidence doesn't come before courage. Confidence is created by courage. New traders say, when I feel more confident, I'll trade correctly. Veterans reverse it. I trade correctly, and that's why I'm confident. Every small act of courage creates what psychology calls self-efficacy. Not vague belief, hard evidence that I was scared, I did the right thing, and I survived. Your brain doesn't need encouragement. It needs proof, and proof only comes from action. The compounding effect works both ways. Every time you avoid a hard decision, you're also compounding, but compounding fear. You avoid once, next time is harder. You break discipline once, next time it's easier to break. You run from emotion once, next time emotion is stronger. There is no neutral state in trading. You're either building your capacity to face reality, or you're training avoidance. The calm traders you see weren't born that way. They simply chose courage in hundreds of small moments no one ever saw. No heroic scene. just consistency. After a few months, you begin doing things you once believed you couldn't, holding through a pullback, accepting a losing streak without panic, not getting shaken by a large candle, not because you're fearless, because you're familiar with fear. And once you're familiar with fear, it can't control you. That's the most beautiful upward spiral in trading. Courage, correct action, more confidence. More confidence, bigger courage, harder, correct actions. The spiral is quiet, but if you stay inside it long enough, your entire relationship with the market changes. You stop asking, will I be afraid? You start asking, what is the right thing to do? And once you get here, one more crucial lesson appears. Courage doesn't mean you won't fail. It means you must fail the right way. Part 9. The Profitable Failure Frame, How to Lose Without Breaking. In trading, failure is unavoidable, but breaking is avoidable. The issue isn't whether you lose, it's how you lose. Some traders treat every loss like a wound, others treat every loss like a lesson. Same account outcome, completely different psychological impact. Failure isn't the opposite of success, it's the raw material of success. No sustainable trader exists without more losses than they want to admit. The difference is how those losses are processed. The Profitable Failure Frame has 3 clear steps. Step 1. Controlled experimentation. You don't enter the market to prove you're right. You enter to test a hypothesis. Does this setup have edge? Does this management approach fit? How does my psychology respond at this risk level? When you treat every trade as an experiment, the result stops being a personal verdict. It becomes data. Step 2. Honest analysis. No self-hate. No excuses. Just cold questions. Did I follow the plan? Did I manage risk correctly? Where did I break discipline? If the trade lost but followed the plan, that's a good failure. If the trade won but broke discipline, that's a dangerous failure. Inexperienced traders learn from outcome. Mature traders learn from process. Step 3. Intelligent adjustment. Not changing strategies weekly. Not adding indicators after losses. Not deleting the whole system. Small, intentional adjustments. Reduce size if psychology can't handle it. Simplify entry conditions. Limit daily trades. Small adjustments create huge differences over time. Here's the secret. Few accept. You're not trying to avoid failure. You're trying to fail faster, cheaper, and more meaningfully. Like learning to ride a bicycle. You don't succeed by avoiding falls. You succeed by falling enough times without serious injury. Trading is the same. A small loss teaches you more than a big win fueled by luck. The problem is, many traders don't give themselves permission to fail safely. They trade too big. They attach ego to outcome. They treat every loss like a sentence. So every failure makes them weaker instead of stronger. A trader using the Profitable Failure Frame treats every loss like a course. Some courses are cheap. Some are expensive. All provide information. A difficult conversation that goes badly teaches communication. A bad trading month teaches your tolerance limits. The goal isn't perfection, it's progress. Each correct loop makes you sharper, more flexible, less fragile. And once you start failing correctly, you begin to need something else. Not motivation, a system. Because nobody can rely on willpower to do hard things forever. Part 10. Building challenge. Rituals. Turning the hard thing into a system. No trader does hard things consistently through motivation alone. Motivation comes and goes. Emotions rise and fall. If doing hard things depends on inspiration, you'll only be disciplined on easy days. Long-term traders don't rely on willpower. They rely on systems. A challenge ritual turns growth from a choice into a default. Like brushing your teeth. You don't need motivation. You don't debate it. You just do it. Trading needs that architecture too. A ritual doesn't need complexity. It needs consistency. Same time, same mindset, same commitment. Today I choose growth, not comfort. A trader's challenge ritual should have 3 layers. Layer 1, daily challenge. Not trading every day, training your nervous system every day. It could be, sit still 5-10 minutes before the session without opening charts. Write down emotions before entry. Stop trading at the scheduled time, even if you still want to trade. Small things. But They keep you awake. Layer 2, weekly challenge. This is where you expand your range. Hold discipline through a losing streak. Don't break the plan for an entire week. Stay out even when the market feels itchy. One weekly challenge is enough, not many. But it must be completed fully. Layer 3, monthly challenge. These force you to face true limits, slightly increase size when conditions are met. Show your trading journal to someone else. Look directly at losing statistics without lying to yourself, not to punish yourself, to test your current capacity. The key: don't chase a perfect routine. Perfection is the enemy of practice. Many traders spend hours searching for the ideal process, when they only need a functional structure to begin. The brain learns through repetition, not through beautiful plans. Small daily actions beat big monthly actions. Once the ritual is built, you stop negotiating with yourself. You don't ask, "Do I have enough discipline today?" You ask, "What does the ritual require today?" And you do it. Over time, what used to be hard becomes normal. Not because it's easier, but because you're different. And there's one final factor that multiplies growth speed: environment. Because it's hard to do hard things when you're the only one doing them. Part 11. The advantage of community: why traders go further together. Trading looks like a solitary journey. You sit alone, you click alone, you carry profit and loss alone. But the truth is different. The fastest, most stable traders rarely go alone for too long, not because they need advice, but because they need an environment where growth is normal. Humans are shaped by the norms around them. If you're surrounded by people who complain when losing, brag when winning, blame the market, hunt sure bets, then it's hard to keep a healthy nervous system. Not because you're weak, because your brain learns from environment faster than logic. But when you're in a community where discipline is respected, losing correctly is treated as success, process matters more than result, and maturity is expected, doing hard things becomes normal. You don't feel weird cutting losses early. You don't feel stupid skipping a FOMO trade. You don't feel alone going slow. Peer pressure doesn't pull you down. It pulls you up. A right community doesn't need to be big, but it must share one silent value. We're here to improve, not to vent. The biggest thing a community provides isn't strategy. It's accountability. When you speak your commitment, when others know you're trying to stay disciplined, breaking discipline becomes harder. Not because you fear judgment, but because you don't want to betray the version you're building. Sharing challenges makes them lighter. Sharing small wins makes them meaningful. Sharing failures correctly turns them into data instead of weight. Many traders can talk about markets for hours, but avoid talking about their own psychology. What if those conversations became the norm? What if asking, "Did you keep discipline today?" became as common as "What did you trade?" Then the whole trading experience changes. But community only works if you choose the right one. You don't need judges. You need people who pull you back to process. You don't need constant positivity. You need honesty. The right community doesn't just support your growth. They expect it. They create an environment where choosing the hard path isn't special, it's necessary. And when you reach this point, a deep transformation happens. You stop merely surviving trading. You begin to flourish because of pressure. Not because pressure disappears, because you've become a system that uses pressure as fuel. That is true anti-fragility. You don't just endure the market, you improve through it. And in the final part, we close this journey with the deepest change of all: identity. Part 12. A growth identity. When you're no longer trying to trade well. There's a quiet moment most traders miss. Not when you win big, not when your account breaks out, not when you find the ultimate strategy. It's when you realize you no longer have to force yourself to do the right thing. You still feel fear. You still feel discomfort. But you stop arguing with them. You execute correctly because it's who you've become. This is identity level change. Before, you asked, "How do I control my emotions better?" Now, you ask, "What would the person I want to become do here?" When identity shifts, discipline stops being a battle. You don't need motivation. You don't need reminders. You don't need promises to the future. You just do it, not because it's easy, but because it matches the person you're building. You went through the comfort zone and saw it doesn't protect you. You understood the ancient brain and stopped letting it drive. You learned to use pressure to become sharper, not more fragile. You exposed yourself to discomfort slowly. intentionally. You read resistance as a compass instead of fleeing it. You increased load at the right time and recovered correctly. You compounded courage through hundreds of small choices. You failed the right way and turned failure into data. You built rituals so discipline didn't depend on feelings. You chose an environment where growth is normal, and now you are no longer someone trying to trade well. You are someone who learns through trading. That is a growth identity. Wins and losses no longer define you. A trade is no longer a verdict. A losing streak is no longer a catastrophe. Each session becomes a learning loop. You become curious instead of afraid. You observe instead of react. You adjust instead of punish yourself. You start asking a different question. If I knew I couldn't fail, what would I do correctly right now? And then you realize the act of trying is already success. That's trading's most beautiful paradox. When you learn to do hard things, your trading life gets easier. Not because the market gets kinder, because your capacity expands. The things that used to stress you become data. The things that used to panic you become variables. The person you were at the start of this journey wouldn't recognize you now. Not because you're technically better, but because you're stronger in identity. The goal was never to eliminate difficulty. The goal was to change your relationship with it. When difficulty stops being an enemy, it becomes a teacher. When resistance stops being chains, it becomes a compass. When emotion stops being a barrier, it becomes information. And when trading stops being a war against yourself, it becomes a refinement process. You don't need the market to be easy. You only need yourself to be wide enough. Keep finding challenges that fit. Keep expanding the comfort zone. Keep doing hard things not to prove anything, but to mature. You don't need to become someone else. You only need to become yourself without being ruled by fear. And once you learn that, any market is just a training environment. You are no longer only surviving. You have begun to flourish. Now keep going.